Good day. Ira Epstein of Linen Associates with your metals market wrap up for this Wednesday, and we are now at September 23rd, 2020, about 6:20 p.m. Central Time. So we've already opened the financial markets, and I was waiting on that, and we can talk about it. A big issue looking on these markets is COVID-19. It is surging again in Europe. You've got to keep your eye on what's going on there, be it France, the UK, Ireland, Spain. It is now moving and moving quickly again, and that's causing a lot of concern for the market because it takes world economies backwards when that occurs. We're seeing better economic numbers, but they're in the rearview mirror. Now that COVID's picking up, what do you do about that? We haven't seen that yet in the U.S., but pockets are beginning. Brooklyn and different parts of New York. You're watching Mayor de Blasio talking about the pockets are picking up there too. There's big concerns as to what's going on. That hasn't been lost on the stock market, which is getting hit. We have the election coming. You know, it was just a week or so ago I thought a trade top was in for the stock indices in September. I thought that whole rally of September was sort of like, oh, let's put all the euphoria in the market. But at some point, you've got a pretty tight race in this presidential election. And with that, the monies have to start worrying what's going to happen, who's going to do what, does the change mean anything, what does that anything mean? I can go on and on about it. The other thing, of course, is the Supreme Court. You've got that going and all the other things going on in America. You can see gold is pulled back. It's now back to a key moving average. I'll show you that in a minute. You're at the 18-week moving average of closes on a weekly chart. Silver, this is not wrong. It's down almost $1 an ounce tonight. So don't think that's a misquote. That's 96.5 cents. That's a big break. There's a major washout going on in silver. As those that piled in don't understand the word, sometimes trends change. Sometimes a bet, where are you wrong? Well, they're looking at that. Or maybe there's new bets going on, people getting real bearish. The rising dollar is the enemy of the metal markets. It's not a friend to it. It's an enemy. It's also, at the end of the day, an enemy to the stock market. You want our exports to be better, but the reason it's rising is fear. Keep that in the back of your mind. So as we look at just a close-only chart, that's all that this is, a weekly close of gold. You can see how the market's back to that the 18-week moving average of closes. That's often where markets go to figure out what they want to do next. This is no surprise to me. As the market was up here and it came back, it eventually decided to move on back up. It'll be from here that we're going to sit there and talk to each other in the coming 3 weeks or so, and we'll say, was that the opportunity, or was that a story that said, no, the bull move was over? We'll talk about that. You finally got under this break low. Now, if I take out today's action, you had been in all this action so far. Today you broke down, and now you're getting your follow through tonight to it. We'll see how much it wants to follow through to the downside. But when we put on this chart, the swing line, the pattern has been what? Lower highs, lower lows. So away from me saying, oh, I told you, I didn't tell you anything. All I've been saying is you've had this pattern. You have had a bearish pattern with, even here, lower highs, lower lows, and this was Monday. Now the market is falling apart, but it was set up from that. So let's take a look at where the market was with moving averages. The battleground had been, and it had been in all of August and early September, the 18-day average of closes, the red line. From there, the market has finally fallen to the next moving average, the 100-day average. If that gives ground, 1641 will be a number people will talk about, the 200-day. But it's not just moving averages. You've got to look at where the Bollinger Bands are too. And that is the algorithm that looks to see, is the market getting ahead of itself in one way. It only stays outside of these bands 5% of the time. It is not uncommon in a sideways market, and that's pretty much what we had. Let me just bring this up so you can see it. There's that sideways action. And in a sideways market, to break out, you will get out of the Bollinger Band to the upside or downside. It's not uncommon to get a lot of false starts, and you certainly had your share of them. So this first break that we had on Monday, the question was that going to be a false start or not? Then yesterday, the market couldn't really do much. It still hung at that Bollinger Band. That's not a good sign. If today wasn't an up day in the market, you've got a problem, and you're putting into play the potential of getting to that average. And that's what I wrote this morning in my newsletter, and that's what I was telling traders in my 5:40 a.m. recording for my subscribers on this chart. Now, I want to go on record saying this is a support zone. Getting through this number and staying under it, not going to be an easy task. I will be surprised if you don't get a lot of short covering in this area. That is a lot different than me saying be bullish. That is not what I've said, but I am clearly saying that's where I'm expecting short covering to be showing up right now. When we look at slow stochastics, they're oversold. Why am I saying this statement? Oversold under the Bollinger Band now for 3 days in a row, maybe 4 with today. You're under it certainly today. You were closed under it here. Yesterday, the market closed at 1907.60 under the Bollinger Band and the day before. So I could have 4 days in a row down. It's rare you go beyond 5, and now I'm at key areas. So from my point of view, this is where I think that the smart money starts taking money off the table. They're not going to get aggressive trying to say, oh, we're going to take you down to the 200-day average, another $200 an ounce. Doesn't mean it can't happen, but that's not what I think's going on. In the gold-silver ratio, again, we noticed back here when this market was doing that, and I said, watch out, this market's changing on you. I don't know how high it can go, but silver is losing to the gold market. You see that very clearly. And without silver being supportive, it's hard to get a bull market in gold. They often run together, and silver's leading the way to the downside. Where's silver going? I want you to look at the 100-day average. I'm going to make the same statement. I think right here, right now, we're at 2220, the low's 2200, 2193 is that 100-day average. This is where I think the shorts are doing a big amount of covering. We'll see if I'm right or wrong. There's nothing here to get bullish about, but there's plenty of reasons, as I see it as a market technician, where I can understand the short covering starting to come into the marketplace. Copper. You've instantly gone, and this one's always fun, from the upper band to the lower band. Whoa. And this is overall sideways action that keeps hitting this 18-day average of closes. Let it do its thing. It's not a trend trade. This market's just whipping back and forth. In the platinum market, you stayed under. This is where I thought more support would be seen. I could be wrong on the gold and the silver very easily. I thought support was going to be here. There's nothing bullish. You haven't heard one word from me on bullishness. But that's where the market is right now, and we'll have to see just what it wants to do and how it wants to do it. So be careful right here. This market's vicious, overdoing it in my opinion. How many days do we have under the Bollinger Band? You can't count today because we don't know what it'll be, but you certainly were under it on the close of business on Wednesday. Yesterday you were under that band. The day before you closed at 884.70 under it. So like the other metals, you could be in your 4th day under it. So 5, as I said, is very rare to get to 5 under it, but you are riding that band. If you were to embed, which you're not trying to do so far in any of the metals, but if you were, I'd be getting even more bearish these markets. The reason I'm not getting more bearish is you're oversold. In the palladium market, you've gone from the upper Bollinger Band in 1 week of trading to the lower band. That's vicious action, just completely vicious. Don't try to be a hero in that type of market. And in the dollar index, we are now trying to stay over the upper band in an overbought market. If it embeds, this market could be getting back up to this number. I think you've caught a tremendous amount of people wrong in major currency plays. All I kept reading was reasons to be long the euro currency, short the dollar. And that trade has not worked. It's that simple. It's not that things weren't getting better or that the ideas behind it weren't initially right. COVID's come into play again. And COVID upsets the apple cart, and that's what I think you've got. But when you get these big moves, what do you do intraday? Because a lot of you like to take advantage of the volatility and trade with it. One of my favorite trading tools for that are pivot points. And what I did is I created a 3-part video series that is free to you. And it shows, number one, what the formula is. I start off with a PowerPoint. This is all via recording, of course. Then I show you how it works. Then I show you how to put it on a chart and what it all means. Where's the sell and the buy zones? Then I'm going to tie it together with momentum, which most people don't do. And then you've got a game plan that you can work with. So how do you get this? As I said, it is free to you. Just go to our website at www.iraepstein.com. You'll see free offerings. Sign up for that. You might want to look at the Arun indicator, which is a verification indicator if a trend is staying in place. Another cool thing to learn. I'm Ira. You have a great day, and I'll see you all tomorrow.